Well, it's a good question, the question about adding value through renovation, because a lot of people own assets or are thinking of buying an asset to add value, add their touch and make a mozza. The difficulty there is that the difference between the market today and let's say during peak market October 2010, just prior to the turn, the mistakes a lot of people were making at that point in time, overcapitalising, doing renovations that weren't appropriate for the local area, the mistakes were being softened by the rapid growth that was occurring in the market at the time. So that was offsetting what would possibly have been losses at the time. Jump forward to today's market, where the growth profile for Sydney, for example, is not as strong as it was in that peak season. What you're finding is that people who are jumping into properties, spending too much, doing the wrong renovation, over-capitalising or missing the mark, as it were, they will be penalised through the modest capital growth. It will take far longer for them to catch up to the amount of money they've put into their renovation. Equally, they'll be penalised by would-be tenants through either, if they've missed the mark with the renovation itself, it's not appropriate for the area, it's too quirky for the area. What will happen is you'll either diminish the tenancy pool for the property, or in fact tenants won't be willing to meet the asking rental price that's put to market. Irrespective of how strong the rental market is, tenants will only pay what they believe is appropriate for the local market, and it's not just a matter of putting any price on it and asking for that. So the caveat we put to the should I be renovating at this point in time is consider your market, know your market, do your research, make sure the costs associated with the renovation are controlled, look where possible for fixed cost, no variation quotes for the renovation and the build, and understand who your market is going to be in terms of, if it's to be retained as an investment, who your tenant base is going to be. Do a renovation in a style that's going to appeal to the broadest tenancy base. It's not going to be out of line with the local area or too quirky. Equally so, if you're thinking of doing a renovation to turn the property around and on-sell it, or flip it, is the expression, flipping, just think carefully about what's going on in the market at which point you're intending to sell. So if you purchase the property now, do a fast renovation, look at turning it around in the next, say, 3 to 6 months, consider the growth profile for the area, and if at this point in time we're looking at a modest 5% across Sydney, generally speaking, to try and turn a property around in such a short period of time and expect a strong increase or return on your money is probably a little bit at odds with what the market's prepared to support at this point in time. So what we would recommend for those people who are looking at renovating is particularly more, we would recommend it more in the case where somebody's looking to buy and hold the asset, get maximum deductions out of the renovation, the tax deductions through retaining it as an investment, and then look at getting some modest growth which tracks in line with the local market before considering either on-selling or gearing against it.